Hey guys, Outhenticfx here. Today's lesson will be on institutional market structure, right? We will be focusing on bullish order flow, bearish order flow, consolidation, and how to spot a true high and a true low when it comes to, true higher lows and lower lows. For instance, we are going to start here on the left with our bullish order flow. What we usually see, price will see a consolidation, then price will create that low, break structure, create the high. Once that high is formed, we then see a follow through of that higher low. Once the higher low is printed, right? If price starts consolidating at this area, this does not become our newfound higher low till price breaks structure to the left and then creates the higher high. We need to always see this follow through for us to confirm that structure is bullish, right? When it comes to bearish structure, we'll see a high being printed, then a low. Once we see that this lower high does not surpass or break this high, we know that we are bearish once we see the lower low form, lower high, lower low, lower high, lower low. So we always need to see these breaks of structures. And the question now is, how do you know that structure has shifted? So from creating these higher highs, we then see price breaking this previous high low over here, breaking it like that, coming up, creating that lower high, and then continuing its lower low, lower high, lower low structure, just like this, right? That's how we'll know that price has shifted. Once we break this previous high low over here, break of structure, bottom. But if we see price not breaking this and maintaining its position but consolidating within this area, that means we need to be ready to spot the newfound higher low within this area, because usually what you'll see is we'll be stuck in a trading range, right? Which I'll explain in a few. We'll see price being manipulated around this area. From there, we now need to ask ourselves, is this our new higher low or this higher low? But no, that's not the case. The only higher low that we are going to confirm is the one that breaks structure to the left. So now this will become our, let me delete that. This will become our new higher low over here. All right. Give me a second. This will become our new higher low here. Because this higher low is the cause of the break of structure to the left over here, right? So if we do not get that break of structure, we do not confirm that new higher low or lower low, for example. So looking at this bearish order flow here, to confirm this break of structure, we need to see price push up, break this previous lower high here, and then from there create that low. I mean that that low, and then from there we now see higher highs and higher lows start forming from there. So yeah, guys, that's bearish and bullish order flow for you. I am now going to be explaining how to spot a true break of structure, right? So as I said here before, we create the low over here, then the high. So to confirm this higher low, we need price to then break this high, because if it stays within this area and starts consolidating like this, we then now need to look for the previous higher low that broke structure, which will be this one obviously here, not these two. We need to always see that follow through. We need to see the low, the high, then this higher low needs to break structure to create a higher high, right? So usually what you'll see to my right here is an example of a low being formed. Then we have the high. This now becomes our new higher low because it broke structure to the left. So we just take our tool here, we go bam, BOS top, bam, we broke structure. That becomes our new higher high. So now what happens now when price channels down, pushes up, channels down? This does not become our new high low because it did not break structure. It only becomes a pullback, and then we have another expansion, and then from there this will become our new high low because price expanded and broke structure to the left side, as you can see here. So we'll usually be stuck in a trading range. Sorry, let me just fix that. High, low, done. So if price does not break structure, we will be stuck in a trading range between the higher low and the higher high till we see that break of structure. Then the previous higher low, if price does not break this higher low, is the move that we're gonna count as our new higher low, higher high, right? Vice versa with selling. I can just redraw the selling side over here. We will see price create a high, a low, right? So now, does this become our new lower high? No, because we need to wait for price to break structure to the left. We need to wait to see price break structure to the left, BOS bottom. Now that will confirm that this is our low, lower high, lower low. Then from there, we now need to see the same pattern continuing, guys, and so forth. We always need to see the break of structure. If the break of structure does not happen, that means we are stuck in a trading range till we break either this high, low, or the lower low, for instance here. So let's say price pushes down to this low, and then we see price being stuck within this area. We cannot say that this is now a new lower low because price did not break this previous lower low. We need to see a follow through first, and that will confirm that this is our newfound lower low, right? So let's get into micro and macro structure so that we can see how we need to use this against retail traders and how we will benefit based off the market, right? So macro structure, let's write down some notes. Macro structure is the swing points of price, and micro structure is the inner structure of the swing points, usually found on the lower time frames, guys. Time frames. Actually, we're gonna make this small. Just keep it here as our notes, right? So macro structure is the swing points. You know, we identify macro structure on our higher time frames, such as the H4, the daily, and the weekly and the monthly, right? So when it comes to macro structure, we're looking for the swing points. We do not care about what's happening in between. We just care about the swing points. So we have this swing point here. Then we have that pullback swing point, right? From there, we have another swing point here. Does this swing point create a lower low? No, which means this becomes a low, and then this becomes our higher high, right? Higher low because it's lower than this low, and then we have our higher high over here, right? So this is macro structure, the overall picture, the swing points. So we have lower low, okay, no, a low. We have a low. This will be our high, right? Then from there, follow through, we have a lower low, lower low. Why? Because we have that break of structure over here. Bam. Break of structure. BOS bottom. And then from there, we've created that lower low, right? Lower low over here, right? So now from there, we then have this push to the upside. And this push is still lower than this lower low. So that means this now becomes our lower low. I mean lower high, sorry. Nope, I'm wrong. Sorry for that. This now becomes our high because it does not expand to break structure to the left. If it broke structure to the left, that means now that will be our lower low. This now becomes our high, right? Our high point. over here, high point. And then from there, we follow through to create a low point. Low point over here because we did not break structure to the left. So this will be our low point, right? From this low point, what do we then see? We then see price breaking this higher high over here. BOS top, creating a newfound higher high on the swing point, right? Follow through, we have this pullback, right? We do not see price breaking this low. So this now becomes our newfound higher low, because what does it do? It breaks structure again to the left over here. Bam, BOS top. Right? We break structure to the left and then we create our new higher high, guys. So it's very important to be very careful. As you could see, I made a mistake there. Be very careful with marking up your charts, especially with macro structure, because once you understand macro structure, it's easier for you to find your entries on the lower time frame, right? You need to identify the trend before anything, right? It's always very important for you to identify your trend when it comes to the market. Let me just delete everything now and then show you what is microstructure. Give me a sec. Delete, 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 delete. Okay, cool. So now when it comes to microstructure, we're looking for the movements within price. So let's just get into it from here, right? We have a break of structure here. Boom. BOS top. So that means this now becomes our low. Low, sorry. Right? Since we're in a bearish trend, you can see low, high, low. Then from there, this now becomes our high because it did not break structure. Then now this becomes our low here. This becomes our low here. Right? So if here we had this push from here, from this high, we had this push going down, this would become our lower high, but that did not happen. So we just mark it off as a high. We mark this off as a low till we get that break of structure, which we do over here, right? With this move here. So from creating this low, we then create a higher high. We then create a higher high. This is our low. Higher high. What happens then? We have our higher low here. Right? High low. We break structure to the left over here. BOS top. Can you see? So now we focused on the inner structure compared to the swing points, right? So if you want, you can always just mark off your charts with different colors when it comes to, you know, your low points and your high points. And then, you know, maybe red can be your macro structure and blue can be your micro structure, right? From creating this new high, we have this high here, right? We have this high. And then what do we have from there? We have this low, higher low here, higher low here. Move this up because we broke structure to the upside from this point. This now becomes our newfound higher high. Boom. Okay, cool. Higher high over here. So now it gets interesting, right? So now this is where now we have to think, okay, cool. So we've created that higher high. We can see we're in a bullish market, right? We've got 1, 2, 3, 4, 5. You can see clearly higher highs, higher lows, higher highs, higher lows, right? So then from there now we see that, okay, cool. This level here is seeming to form some sort of liquidity at this area, right? So let's just mark off that liquidity. See, there's liquidity, which means that the market has to come down at some point, right? The market has to come down at some point. So once we create this higher high, We then see price creating this equal lows, right? So now this here will become our low because it's lower than this point over here, possibly has a wick. So this will now become our low, right? Did price break this higher high? No. So this will just become a high because now we're shifting structure, right? This will just become a high over here. And then what do we have? We have a break of structure to the left, to the right side, I'm sorry. Break of structure bottom. So now once we create that low, we create that high. We then see now price, because price was stuck in a trading range here from this higher low and this higher high. This is a trading range. This is a trading range. So we can't say that this is a higher low and this is a high high. No, guys. Equal highs, equal lows, right? And then till we get that break of structure, either to the bottom or the upside, is then when we decide on everything. So once we break structure, now we've created a low, right? We don't even need to mark up this level here. We could literally just leave it like this because it's in a trading range. There's no structure which has been formed yet. Push that up. Delete. Delete. Create that low. So now what happens now? Now we want to see, okay, cool. Since we created this low which swept liquidity swept. Liquidity swept, right? We need to see if this low is going to create a lower high and then from here follow through to create that lower low, lower high, bam, bam, bam. But instead that does not happen, right? So what we then see is the low is created, right? So from there creating that low, we then see price creating a high, right? Which is here because we broke structure to the left side. Create that. Let me just put in the text, create a high. And then what happens? We get a minor pullback over here, creating that higher low because we have a follow through from that high. We then see price following through to break structure again. Break structure, which means the trend is still bullish. Higher high, higher low, higher high. Can you see it, guys? We're looking at the inner structure of this swing point. Higher low. I will show you live chart example of this. Higher high. Keep breaking structure, guys. So the trend is still bullish. We just had to sweep liquidity. Higher low. Perfect. So we just had to sweep liquidity here, and then that would show us, you know, the intent of price. Possibly reacting off this demand zone, which we'll get into later. This demand zone over here. Boop. Swept liquidity, hits our demand zone because we have that break of structure, bullish consolidation before the expansion. Then price will always return into that demand zone and then break structure to the upside. So when it comes to macro structure, guys, remember macro structure is the swing points in the market, and microstructure is the minor structural points within the swing points, right? Microstructure is the inner structure of the swing points, usually found in lower time frames, your 5-minute, 15-minute, and so forth, guys. So let me get into showing you live examples on the chart of bullish and bearish order flow and macro and micro structure. Okay, cool. Here we see consolidation, right? This is our consolidation point. We are going to mark this as accumulation, right? Because the market is accumulating orders to continue bullish. We then see price break structure, right? Oopsie. Let's lock this in so that it does not disturb us. Send back. break of structure to the left, BOS top, right? So that means this is our high, boom, and then this is our low, our low is here. We then need to see price create the high, because we broke this previous high over here. Then what happens? Does this move break this low? Nope. Instead, it breaks the high. So now this becomes our new higher low. All right. There's demand, supply and demand within every single expansion. You can just see it here. We have this consolidation, expansion, creating that new higher high. And then from there, price will return into our demand zone. And then that's how we trade. So we'll get into that later. I'm just showing you bullish and bearish order flow at this point. Higher high. Higher low, because we break structure. Higher low. We just mark it up quickly from this point to this point. BOS top. Bam. BOS top. We always need to see that break of structure to confirm, guys. We cannot afford to make that mistake and guess. There's no time to guess. Higher low. What happens then? We have a high. Broke structure to the left. High. From this higher high, you can see it's a minor pullback. Price is very bullish, right? So I'm going to show you how we shift from bullish to bearish. BOS. Bam. Hello. High. Minor pullback, guys. Remember, microstructure also counts, right? So if we were looking at it from a macro structure point of view, this would be our low, this would be our higher high, this would be our higher low, and then from there, this would be our swing point, higher low, swing point, higher low. Then from there, this would be our next swing point, right? We wouldn't consider these small pullbacks within here. Then from there now, let's get into the shift. Higher low, high, higher low, right? Nope, actually it's not a higher low anymore because it did not break structure to the left. We didn't see the break of structure to the left. So this now becomes a low, and then this becomes a high. All right, a high. We are stuck in a trading range between this higher low over here and then this high. We then need to see a break of structure. The break of structure happens here. Once we break this previous high or low, this now becomes a break of structure to the bottom. Boom. And then what happens now, guys? We can clearly see we create a lower high, then a lower low, right? Lower high. Let's put this here. Shift this to the left side, put this here. So yeah, I have the high, then from there we have a lower low, right? Lower low, lower high, lower low. Does this become a lower high? Nope. This is our new low because we break structure here. So that's now our lower high over there, lower high, because we have broken structure to the left, right? Structural points have been broken this previous low. Ooh, BOS bottom, BOS bottom. So now we bearish, guys, right? So we're gonna mark up the microstructure as well. This becomes our new lower low now, right? Low, 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 low. Bam. So now what happens, right? Price does not continue fully down. It stops at this level, breaks structure, breaking that previous lower high, which means there's a structural shift in the market. BOS top, which means now this becomes our high, and then we have a follow through breaking this lower low? No. So then this becomes our low, because now we're in a consolidation. And then from there, what does price do? Creates a higher high, obviously to sweep liquidity. As retail traders were selling at this double top here, it needed to take out liquidity there. So we can even mark this up here. Liquidity swept. Liquidity swept. Liquidity swept. Creating that higher high. So now, do we get a lower high? No. So now that means we are in a trading range between this level, which is here. I'm going to mark that off as, let's see, what color will suit it? Red. Let's make it a bit thick. We're stuck in a trading range, guys. Trading range. So what then happens? Price breaks down because people are buying on this double bottom. Price breaks down, right? Breaking structure again. So now since we have this higher high formed, we then now get into seeing price forming a new low, which is over here. A new low. And then this now becomes a high. Right? From this high forming, we break structure again. So this is now a lower low. And at this point, we just enter consolidation. But guys, as you can see, we're stuck in a trading range. We're stuck in a trading range between this point. Once we get that break of structure, we then repeat the same pattern. But then what does price eventually start doing? Low, low. Because we break structure here. We broke that high. We broke this low over here. Breaking structure, low, low. Lower high. Lower low. Let me delete this so it doesn't get in the way. Delete all of that. That's a shift in market structure, guys. We need to see that follow through right here, breaking structure aggressively. Now we have a lower high, lower low, and a lower high. Right? So this is how bullish and bearish order flow works, guys. We just need to be inconsiderate or take into consider the fact that we need to see that follow through, breaking the highs, breaking the lower lows, right? And then within each move or these swing points, we have microstructure. So if I can go to the 5 minute, we'll have structure within here, structure within here, structure everywhere. So it's really always hard to spot structure in a consolidation. So usually you can just mark up your consolidation area like this, right? This is how we're going to get into the Wyckoff. I'll explain Wyckoff a bit later into the course, but this now becomes our redistribution zone over here. Delete that. delete that. I'll explain Wyckoff. This is definitely Wyckoff. So we do have this redistribution. You can see we shifted structure, created a redistribution phase / consolidation, broke out, came back into this last point of supply, and then started trending down again, guys, all the way, creating those low lows, low highs, right? So it's very important to know market structure and market bullish and bearish order flow. Sorry. So yeah, guys, that is all for the course for today, and let's get into the next lesson.